Stocks on Wall Street shrugged off an early weakness and closed higher on Tuesday, halting the first four-day losing streak. The S&P 500 climbed 1.1%, led by solid gains in technology and communications stocks. The Dow Jones Industrial Average gained 0.5%, and the Nasdaq Composite climbed 1.7%. As for tech giants, Apple gained 1.6%, Microsoft rose 2.4%, while Amazon climbed 5.7%. On the data front, the National Association of Realtors said that sales of previously occupied U.S. homes rose 2.4% in August to their highest level since 2006. The Federal Reserve Chair pressed Congress to act on additional aid for the economy on Tuesday, saying that the economy appears to be improving, but still likely needs more government stimulus. Asian markets were mostly lower on Wednesday as investors kept a cautious tone on the back of coronavirus developments and the economic outlook. Tokyo's Nikkei 225 fell 0.6%, the Hang Seng in Hong Kong edged 0.1% lower, while South Korea's Kospi sank 0.8%. Stocks in Australia jumped after the government reported retail sales fared better than expected, despite a renewal of lockdowns to battle coronavirus outbreaks in Melbourne and its surrounding Victoria state. Retail sales fell 4.2% from the month before, much less than the 11% forecast. As a result, Australia's S&P ASX 200 rallied 1.5%. In Europe, stocks closed higher Wednesday as investors reacted to fresh economic data and weighed up the possibility of further stimulus measures for the region. The Pan-European 600 closed 0.7% higher as most sectors and major markets remained in positive territory. The German DAX climbed 1.4%, the French CAC rose 1.6%, and the FTSE 100 gained 1.7%. On the data front, Eurozone business activity slowed in September, with the IHS Markit's preliminary composite PMI reading coming in below expectations at 50.1, down from 51.9 in August. In the UK, the flash composite PMI for September came in at 55.7, below expectations of 56.3 and down from 59.1 in August. Meanwhile, Spain revised its second quarter GDP contraction to 17.8% quarter-on-quarter, less severe than the initial estimate of 18.5%. Data from market research group GfK showed German consumer sentiment is set to stabilize in October after a sharp fall this month. Wall Street stocks closed broadly lower on Wednesday, wiping out gains from the day before despite progress on a COVID-19 vaccine and a strong earnings report from Nike. A series of warnings from U.S. Federal Reserve officials underscored investor worries over the resilience of the economic recovery. The S&P 500 fell 2.4%, erasing an earlier gain. The Dow Jones Industrial Average lost 1.9%, and the Nasdaq slid 3%. Nike shares soared 13% after it reported an 82% increase in online sales and offered up an outlook that calls for demand to grow through the holidays. Online sales more than doubled in Europe, the Middle East, and Africa. Its total revenue for 3 months to August 31st fell by 1% from last year to $10 billion, though that was up from the $6 billion in the previous quarter. In currencies, the dollar extended gains versus most rivals on Wednesday. The euro-US dollar dipped to fresh late July lows around 1.1645 early on Thursday and could threaten the 1.16 if pressure persists in the short term. The pound sterling US dollar is climbing to the 100 and 200 DMAs amid Brexit woes, rising coronavirus cases, and a stronger dollar. The USD Japanese yen climbed above 105.00 and is nearing the 20 DMA around 105.60. A break above this level could send the greenback higher. Meanwhile, oil prices finished marginally lower on Wednesday after a short-lived spike to $43. The Energy Information Administration reported an oil inventory draw of 1.6 million barrels for the week to September 18th. This compares with a draw of 4.4 million barrels for the previous week. In gasoline, the EIA estimated an inventory draw of 4 million barrels. Brent remains on the defensive amid deepening concerns over the future state of oil demand as economic reports from different parts of the world suggest that any recovery would be slow. The news that Libya was reopening some of its oil export terminals and boosting production add to the market negative sentiment in the market this week. That is all for today. Thank you for subscribing. Please click subscribe. Always be in touch with the latest market news.